Well, hello. I gotta turn my volume off. Over here. Make sure it's up and running. Alrighty. Well, hello, everybody. Give me just 1 second. I'll get my charts up and running, and we'll see what we got going on today. It was a slow day yesterday, I'm here to tell you. Starting with that, let's see here. Share live stream. Close. Oh, wait, I don't want to do that. Share screen. I already shared the live stream. I want to share the stream, ladies and gents. Give me 1 second here. Hey, Mr. Peeps. What's going on, brother? Yeah, as I mentioned yesterday, I'm still working on the whole graphics side of things. So sorry, you guys just have to check out my fabulous green screen for now, okay? Like I mentioned to the group yesterday, I'm not a techie by any means, okay? I'm still learning the whole YouTube thing and the visuals and all that kind of fun stuff. Hello, Connor. How's it going, boss? So yeah, guys, look, I'm a trader. Trading is what I do best. So I'll eventually work on all the fun graphics and everything. Stuff that dances around, but all that matters is the trading content anyway, right? Hopefully you guys get some entertainment out of it. We try to find some trading setups throughout the days, for the streams and things of that nature. That's all that matters. I'll just sit here and act silly and act a fool, and at the same time, give you guys some good content. So where do we want to start today? Well, you guys, just a recap of yesterday, actually. I guess I could start there. So I was watching two currency pairs yesterday, and that was it because my top setups was just very lax, just not a whole lot going on. If I flip on over here, okay, this is my top setups for the day. Now, Pound Aussie, it's the one that was on the list yesterday, and I think I already forgot what the other one was. It's dropped off, but regardless, doesn't matter because nothing was moving in the Forex market yesterday. So I basically resorted to watching a stock. I was watching Procter and Gamble, and you want to talk about patience and sitting on your hands, guys. I watched that thing probably 6 or 8 hours. Well, actually, the whole trading day, the whole intraday session for the stock market hours, and came down into my demand zone, came in nicely, but I just never got a trigger candle. Okay. I have to have a trigger candle for me to get into a trade. Doesn't matter if it's a stock or currency pair or whatever, index, Bitcoin. And I'm pretty proud of myself because I just practiced great patience. Okay. It's cliche, but sometimes you hear it said that sometimes the best trades you'll ever make are the trades you don't take. Right. And cash is a position. So with no major red events coming out yesterday, high impact events, it was just a good day to sit on your hands, from a Forex standpoint. So I personally caught up on some AI lessons I'm studying for the company. So focused on that. And I did a 30-minute trading session, a 30-minute one-on-one session with a gentleman in the Caribbean yesterday. So you guys, just as a reminder, we do 30-minute sessions, 30-minute one-on-one coaching sessions. So if you ever want a session from a Forex standpoint, okay, Bitcoin, indices, gold and silver, okay. If you want to kind of have a better understanding of supply and demand from a one-on-one standpoint, if you want to hear a little more in-depthness on the fundamental analysis I look at, on the sentiment analysis I look at regarding the COT report, right? Keeping an eye on what the big banks are doing and learning how to use sentiment, retail sentiment as a contrarian signal, then you guys are always welcome to book a session with me. Okay. I believe we're still doing them for free right now. Okay. So there's not even a charge. Excuse me. So it's just something that's provided by the company. Now, what company does that? Okay. I have an hourly charge, but I don't but we don't do it for the one-on-one sessions. So I love doing those sessions too, guys. I encourage you to go check out our website, and I'll just show you guys briefly where that is real quick, just so you guys are aware of this. If you go over to our website, olaprime.com, and then you just go over here to coaching. Let's see here, Forex, okay, one-on-one coaching. You just click on that button. You guys will see my ugly mug right there, okay, along with Coach Richard. He's still with us, okay? He's still with us, helping on the coaching side of things. So, and then just scroll down. You can click this Book Now feature right here on either one of us, okay? Either one of us. Just click the Book Now feature. It'll send you right straight to our calendar, and then you just book a 30-minute meeting, okay? This is for you guys. I love teaching. I love coaching. That's why I do these streams every day, okay? But what I think I might have even mentioned on stream yesterday, the more I teach and the more I coach people, the more I learn myself, okay? The more it reemphasizes my own rules back to me, okay? Makes me a better trader. So it's a win-win for everybody. So just wanted to point that out. You guys are more than welcome to go on here and book a time. From time to time, I'll forget to take away the holiday slots, which I did finally do for Christmas and New Year's, because I did actually have somebody book me on Christmas. I'm like, oh, that was my mistake. That was my bad. So I had to end up canceling it to have them just pick another day. So just wanted to put that out there for y'all at the outset of the show, just so that you're aware that's there. So let's go and share my stream again. I just unshared it. Let's see what we got. Good morning, Xander. Good morning. Connor. Hey, yeah, there you go. There you are. Hey, absolutely. Absolutely. Yeah, it was a good time. Yeah, book another one with me. I got to turn my heater off. It's hot. So, yeah, good deal. Good deal. It's good to have you, my friend. So, what else do I want to update on? Yeah, especially over the holidays. Okay, it's a good time because the markets are slow. There's not a whole lot of volume, not a whole lot of liquidity in the markets. Okay, we need liquidity. We need that. So, whenever there's not, you just sit on your hands. Sometimes it's good to pull out a good book. Okay, a good book to kind of relax your brain. Okay, if you guys are anything like me, I'm pretty much on the charts probably a good solid 18 hours a day. Okay. And that's not because I have to be. It's just because I'm always looking to dig and find more golden nuggets, even 12 years in. Okay. So there's always something to learn in the markets. It never stops. Just about the time you think you figured it out, there's something new to learn. And not to mention all the different news pieces that we get drowned in every day that you see. Whether it's on TV or on all the financial sites that we all like to look at, there's always something to learn. So, but don't ever let that overwhelm you. The basics of trading are simple. It's just all the nuances that take time to master, right? To get great at. So, yeah. As far as that goes, let's take a look. Now, guys, if you remember from yesterday, I got a couple red calendar events today. Okay, we got Canada's GDP report coming out in just less than an hour. Actually, we'll be on stream when this thing comes out. So that's the Canada, and then the US dollars GDP quarter over quarter number comes out. Those reports come out at the exact same time. Okay, 7:30 my time, which is here in Kansas City. So that's 7:30 a.m. Central Standard Time. Add an hour for New York. Okay, for the Eastern Standard Time. Yeah. Remind me like a minute or two before that gets here, guys, and I'll just flip over to a dollar Canada dollar 1 minute chart, and that'll be our what I call the popcorn trade of the day. Okay, what's that? Well, it's just basically where you put it to the 1 minute chart. Okay, you get you a container of popcorn or a beverage of your choice, depending on where you're at in the world, and just sit and watch. Okay, you don't touch the buy button or the sell button. In fact, it's a good idea to take your mouse and throw it around the backside of your computer so that you don't have any, flirting with the button, the buy sell button, and just sit and watch, because it's always good to do that from time to time. As silly as that may sound, it's good to see what true volatility looks like when you have two red folder events for opposite currencies coming out at the exact same time. The key to that is whenever that volatility starts coming into the market, you take a look at the volume spread analysis candles right beforehand. So if I flip over here to chart of dollar CAD, flip it to a 1 minute chart, right? The whole idea behind this is the volume's going to spike. Well, what did the candles look like just before that report came out, or these reports that are about to come out? Okay. Well, you want to keep that in mind, because when that report is released, those two reports, you're going to see a spike in volatility typically. And when can I get into a trade? Tiger, when is it safe to enter the market? Well, in my opinion, it's best to wait. If I just open up the volume itself, okay, you're going to get spikes. You're going to be getting spikes up in this area, right? Okay, now it's going to, who knows what it's going to look like, but it's going to look something like this. The best time to start entering the market is after you wait until the volume starts coming down to at least the levels it was at beforehand. That's just my opinion. You may get different answers from different, trading coaches, but yeah, the numbers don't lie. And when volume starts leveling back out again, okay, at that point, maybe you can look and see if you can catch a trend. Okay? In my case, I'd be looking for a supply or a demand zone. But not until the volume chills out, right? Not till it calms down back to relative to where it was at beforehand. Okay. Now that volume could last a while. Okay. Some events, it might only last a few minutes. Sometimes, like a non-farm payroll or an interest rate decision, it could last a couple hours. Okay. You just never know. So that's just a little trick I've learned over the years, just to know when it's halfway safe to start looking to enter that market. So hopefully that helps somebody. But yeah, we'll take a look at dollar CAD here in just under an hour. Okay, whenever that is released, and we'll just sit and watch it with our container of popcorn, and we won't buy or sell anything. Okay, fair enough. All right, let me take a look over here. Still in it now. Okay, Mr. Peeps, what you got? Sweet short on the dollar yen. Okay, let's take a look at that here in a second. And then you also put still in it now, but it has hit a demand zone, so not sure whether to cut it or not. Decisions. I love decisions. Hey, welcome to trading. There's 1,001 decisions we can make every day, right? Let's take a look at it. So here's dollar yen. Guys, anytime you give me a trade, an asset to look at, if you're in a trade, just let me know. Hey, I got in on a 1 hour time frame. I got in on a 5 minute time frame, or a 4 minute, 4 hour time frame. Let me know the time frames you get in, because that way it makes it quicker and easier to find the zone. So, and then, yeah, whatever the price point is you got in. Okay, that's the main thing I care about. You'll hear people say, just, give me your entry point, give me your stop loss, give me your take profit. Well, we can worry about that whenever we start looking at the chart. So entry price and what time you got in on that. So dollar yen. Yeah, look at this, guys. Yeah, Mr. Peeps, you called it out. We're in a demand zone right now. So let's take a look. So you guys, I like to look at this thing from a top-down perspective, and I turn my drawings off. It starts looking like Christmas up in here, which it's Christmas week, so I guess it works for this week. But yeah, it gets to be too much colors and lines. So I like to turn off my drawings whenever I start from a top down, just to get an overall look. So this is a daily chart. Okay, we've been going up on dollar yen, and especially after Japan, let's see, they rose their rates 25 basis points, I believe it was on Thursday, right? Indirectly was supposed to help the yen, but what happened? Okay, let's go find Thursday real quick over here. Friday, Thursday, right here. Thursday, right here. So as soon as that rate came out, the dollar appreciated a lot, which means the yen actually lost a lot of value. But it came up to this point in time back here, and now look what it's doing. It's trying to reverse the gains of the dollar, meaning the yen is actually gaining a little bit of strength. So where is it at currently? Okay, you guys see this red candle right here? Okay, that's a pretty good looking daily demand zone right there, right? That's currently where we're wicking in. By definition, the origin of the strong move is down here, right? So you could even look at this as a daily candle because it's not giant, but there is a tiny little gap hiding in there. Okay. This is a daily time frame. So the top of this daily wick to the bottom of the second candle over wick, and you guys see that's as that's as small as it gets. Okay. That is by definition a gap, but it's not one that's not like it's not near as strong as clearly the one ahead of it, right? If we look at this daily gap, okay, fair value gap, acceleration gap, whatever you want to call it, okay, that's a lot stronger. So this is a pretty nice area. And for you fib traders out there, you know, if you strap a fib line from the bottom to the top, it looks to me like you're probably going to be in that golden zone, right? The 50 to 61.8. I'm not personally much of a fib user, but from time to time, if I'm just right on the verge of, hey, do I buy, do I sell? From time to time, I'll flip it on there just to see where I'm at. Have I come down to a 38% level? Have I come down to a 50 or obviously a 61.8 or even a 78.6, guys? You get some pretty powerful signals down there as well. Not a whole lot of people know that, but 78.6. So yeah, daily demand. Let's go down to a 4-hour. Okay, there's our 4-hour candle, which is what we're wicked in, what we have wicked in. Okay, this would have been when I'm asleep, drooling on my pillow. Okay. Let's just for the fun of it see what that fib does. Okay, 61.8. Look at that. You want to talk about confluence, guys? You hear me talk all the time about time frame zone confluences. Okay, daily 4-hour, 4-hour, 1 hour, 1 hour 15. Okay, the rule of 4. So keep that in mind. It's the rule of 4. It works a little different with weekly to daily or daily to weekly or a daily to 4-hour. But when you start getting to some of the smaller time frames, the rule of 4 applies. Okay? If I'm looking at a trend on a 4-hour time frame, I want to find my zone on a 1-hour time frame. Okay, 4 divided by 4, it's 1, right? I'm looking at a 1 hour trend. Okay, I want to come down to a 15. So 1 hour divided by 4, 15 minutes. So just keep that in mind when you're trying to figure out, okay, higher time frame, intermediate time frame, lower time frame. Okay, it's just a basic rule. I'm sure some of you have probably heard it. Maybe one or two of you haven't. I'm not sure, but just wanted to throw that out there for you. So yeah, 4-hour demand right there. Okay, it's right on that golden zone for the fib. I mean, it's bounced off perfect. So that's a pretty good confluence. Okay. Now you said you're short this, so yeah, you've got some decisions to be made. And obviously, I'm not a signal service, Mr. Peeps. You know how these disclaimers work. I can't tell you what to do. I can tell you what I would do. Daily, or I'm sorry, 4-hour. This thing's clearly uptrending. Now we're kind of in this weird zone right here. So let's turn the drawings off for a second. You guys see this swing low over here? And then you see this swing high. So that's a pretty good overall impulse leg. Now, have we dropped lower or risen higher than that, the range of that leg? No, not yet. I don't think. Okay. We came close over here. We came not near as close down here, okay, on the lower end. And again, I'm talking about just this zone right here. All right. See, we've been in that sideways choppy action now for about a month. Okay. So I would argue, yeah, you go to a daily, you know, we're kind of in this weird, funky, or even weekly, probably be easier to see, kind of consolidation zone. Okay. If I turn on my master pattern indicator, you guys are going to see a orange box on a weekly time frame. That means consolidation. It means higher time frame consolidation. I like getting into trades after price breaks out of these consolidation zones. Not saying you can't find something on some smaller time frames at all. Just saying for me personally, I'm a higher time frame trader, right? I like daily 4-hour time frames as far as entries. So yeah, just be aware of that. And you guys can find the master pattern indicator as well for free on TradingView. Just go down here and find master. Let's see here. I've got so many things on here. Master pattern right here. No, I'm sorry. The master pattern indicator. I've got 2 different ones, but yeah, this one right here. the master pattern indicator. Guys, a cool thing, if you don't know this, for any indicator you're considering looking at or you want to know more about, you can click on any indicator right here on this little page, and it'll open up the developers, I guess you could say, blueprints, okay, just to show you how that item is supposed to operate. Okay. Master pattern is one that I really, really love to use because it's an actionable way to look at Wyckoff theory. Okay. Accumulation, distribution, trend phase. Okay. It's a really good actionable way to look at that. In other words, are we buying under value? Are we selling over value? Okay. Kind of similar to the curve analysis you guys may have heard me talk about ad nauseum in the past. It's just a good way to see from a higher time frame, am I buying low, selling high? Okay. And it's a beautiful indicator to use just by itself. It's not even, I don't even look at it as an indicator. It's just literally price action. But, you know, I kind of cheat and I have the indicator just so I can turn it off and on just to see at a glance, hey, am I undervalue? Am I overvalue? Just like the order block indicator, guys. Okay. Keep in mind, there's an order block tool too, you guys. This is the supply and demand zones. Okay. MTF, which is multi-time frame, supply and demand order block. Okay. And this thing is awesome because you can go to any time frame. Like I'm on a daily and it just automatically plots your demand and supply zones. And you guys will see how powerful these things are when you start looking into the past. Okay. Connor, this will be good for you. Okay. This is what I was talking about to you. Right. So yeah, just go check this thing out. It just plots them automatically. Okay. Now, a little trick I like to do on this thing, when you turn it on, it's going to default these numbers up here to like 8, I think it is, showing you 8 zones. But then what happens when you do that? It scrunches your price. Okay. It scrunches your price too much. Well, we don't really care about all the zones much deeper and much higher than the one that's in front of us. It goes all the way down to 2. Okay. And that's why I just leave it there. I wished it just went down to 1. I really only truly care about the previous zone, but it does give you 2. It doesn't scrunch price up much at all. And then it just gives you a glance, guys, to see the same turning points that I plot myself. I just do it manually because I don't like, I just don't, because of the scrunching action. Okay. Even on 2, it'll scrunch price. Then you kind of got to move it around like that. So I have it on here from time to time. If I just want to get rid of all the noise and step back, go to a higher time frame, I look and see, okay, on a weekly, on a daily, where the hell are my zones at? Okay. If I'm just like feeling that paralysis analysis we all get in trading, it's just nice to take a step back, turn off your drawings, turn on the zones. So again, I barely use it anymore. I don't need to because I've been studying supply and demand zones for 12 years. So I see them at a glance automatically. But for you guys that might be, you know, on the beginning of your journey looking at supply and demand, that's a fabulous tool for you to check out. So yeah, good stuff, guys. Again, MTF, S&D order block. And I do believe I've got that here. MTF, supply and demand. Let's see, right here. Okay, supply and demand, order blocks, MTF. The developer is JP7FX. And again, you can click that little sheet of paper and, you know, just kind of helps you to look at. Now, he may look at his zones different than me. I actually have my own way of looking at zones I think is more efficient. Because again, guys, you got to make it your own. Whatever indicator you think you want to use or whatever trading style, just know that you want to end up making it your own. Okay, make it your own. Don't just blindly look at what somebody else is doing. Look at it as a guide, but then start testing it yourself. Hey, does that make more sense? Or do I want to make my zones look slightly different? Okay. But the bottom line is, as long as you're catching unfilled orders in supply and demand, that's all that matters. You know, sometimes the colors of the candles may differ from what is taught by the books. Okay. A demand zone has to have a red candle before the big push up, right? That's one of the staples that are taught, but for me, it doesn't matter. Sometimes I'll pick a green candle as a basing candle, followed by my exit candle. So yeah, all that kind of stuff, and which I try to show along the way anyway. But anyway, that's a long-winded tangent there. Dollar yen, guys. Let me turn my drawings back on. Yeah, we're in this trade. Now, I'll tell you, I personally am not interested in trading dollar yen just because it's neutral. Again, it's not on my list over here, right? In fact, I think if I go to my summary here, these are all my neutral readings. So these are all the items that I trade, but they're not giving me a bullish or bearish signal, right? I like to single out the neutrals just so I can see, hey, am I at 0? Am I close to 5? Am I close to -5? Dollar yen is right there. It's a neutral 2. Okay. So it's just not really giving me the greatest signal. Okay. I always start there. I always fundamental and sentiment analysis point of view. The last thing I care about is the chart, right? So I would challenge you guys to do that. Okay, it's a slow week. There's probably, I mean, we might have a couple trade opportunities today because of this red folder event, possibly even one tomorrow because we got some red. We've got a couple tomorrow. But when it comes to Thursday, Friday, okay, it's the holiday. You get over the weekend. I would encourage you guys to start looking into some fundamental analysis and sentiment analysis. I will find out. I've actually created a video on another trading channel of mine. I don't know if I can share that, but I'll see if I can. If I can, I might share that with you guys in the morning. So definitely tune in tomorrow. I'll have an answer for you on that. It's just like a little 20, 30-minute video I made for specifically fundamental analysis, sentiment analysis, and then obviously the technical analysis. So let me guys know if you guys think that might help you out, and I could definitely probably share that. I was planning to just recreate them now that I've got my own channels with Ola Prime. So I just haven't really mentioned it, but yeah, stay tuned on that. Okay, dollar yen. From a technical point of view, man, I'd be wanting to buy this thing. I ain't gonna lie. We did have a daily supply zone from way back here, as you guys can see with this yellow box up here. And we did have a 4-hour supply zone inside. So there's my favorite confluence, guys. This is what I blabber about all ad nauseum. Okay, that red box, that's a 4-hour supply zone inside of the daily supply zone. Look what happened when price touched it. It just melted away. That's as beautiful as it gets right there. Okay. Now, I'm not worried about either one of them zones anymore because they've been mitigated, right? They're used up. So not interested. I'm not worried about if I were to buy something here. I'm really not interested in that turning price back against me because all those would-be unfilled orders theoretically have already been used by the banks, the institutions, right? The insurance, hedge funds, all those people, right? The whales. What we got here? 4-hour daily. Okay. 158.30. Oh, you bought it 158.30. Okay. 158.30. Oh, so you pretty well sold it. Oh, I see. Oh, we're back here. Yeah. Yeah. Well, I mean, that's a good spot to sell it, Mr. Peeps, because it looked like it turned around perfectly for you. Is that right? 158.30. Is that what you said? It was for our insurers 158.30. Yeah. Yeah, that's going to be up here. Yeah, right there. Okay. Oh, yeah. Yeah. Look, if that were me and I was short, I'd be taking my profits because I think that's a pretty strong zone right here. Now, I say that, but I wouldn't just blindly buy to cover. I'd be, if I had a stop loss going on this thing. Okay, let's just draw up a nice little stop loss. I would just choke the hell out of it. So I would leave the trade open, but don't give it much of a leash because this thing very easily from where it's at could just bounce all the way back up, right? Just choke the hell out of it, but then potentially even kick out your take profit, just on the other side of the zone to the bottom side. That's what I do. Because sometimes those zones, think about it. If you've gotten into a trade and you've followed all your rules and you're sticking with the trend or you're sticking with the fundamentals and the sentiment, okay? If you're doing all that, it should actually break through some of these other zones. Okay? Supply or demand zones. In your case, demand zones, right? Should break through them, depending on how strong it is. But this is why we choke it with our trailing stop loss to lock in unrealized gains. So yeah, I like it. That's awesome. That's pretty good. But again, it's a neutral reading for me. It is a plus too. So if you had a gun to my head and I had to get in a dollar yen trade, I would definitely be buying because it's obviously in my favorite all-time confluence of zones. But hey, you know, yeah, just choke it out, and take those profits. Let me see what else we got here. Decision. Yeah, 15-minute chart. Yeah, that's great. That's usually what I do. Okay. I mean, you guys hear me always saying daily 4-hour. Well, that's my zones. Once price enters my zone, I'm dropping down to the 15 and the 5-minute time frame. Because from there, that's where I want to start seeing my bearish engulfing candle, bullish engulfing candle, pin bars, shooting stars. Okay. All the stars. Just to make sure that it's actually giving me a reversal signal inside. Now I want to do that on a small time frame because if you do it on a big time frame, well, by the time it confirms itself, it's already moved away and kind of, shit up your your reward risk ratios. So no, that's good stuff. That's good stuff. Let's see what else we got here. Okay, 157.30. That's what I thought. That's what I was wondering. That's good. Yeah, you're going. Yeah, just anywhere in this area. That's not a bad area. I mean, let's take a look at this. Now, did you do it after it kind of curled up and rolled over, or did you kind of do it over here on the left side, Mr. Peeps? That's what I'm curious about. Because if I'm looking to the left, I was just looking to see what zone. What zone? Let me get that out of the way. Got too much lines in my way. Yeah, this zone, this is what I was wondering is, you said 4-hour zone, and I'm not really seeing a 4-hour zone. I see an efficient market. I see this. Okay, I see that as a potential zone. But let's take a look. Look at the wick of that candle. Okay, did this candle wick, that green candle, did that touch this candle here, 2 candles over? Yes, it did. So I'm glad it worked out for you, number one. But this is just me being picky of 12 years of studying this stuff. I would not have used it because, in my opinion, that zone has already been touched, obviously, by this candle here. Does that make sense? Okay, we're really getting into the nitty gritty and really advanced stuff here. But I see, if that's the zone you're talking about, I see what you're talking about. But that candle popping through, that would have negated it for me. And not only that, this candle here, it was as it curved over. Okay. Blow my EMA. Okay, so you're going by EMAs. Okay. EMA retest. Okay, I got you. No, I got you. That makes a little more sense. No, that's good. Hey, you've got a good, 80 pips out of it? 80, 90, 100 pips? Hell yeah. Let's go to a smaller time frame. What happened after it bounced into this zone? Look at that. You had a big, lovely wick that's rejecting it. So, yeah, I definitely would be careful. I mean, that's as pin bar-y as it gets right there, right? On a 30-minute. It's just went sideways. So, yeah, good stuff. My chart disappeared. Let me stop and reshare, guys. Sorry. Share screen. And share. Let's see if that pops back up. Hey, there we go. All right, good stuff. Good stuff, man. I'm glad you made some money on that. Let's go back to my top setups. And again, we got about 26 minutes until that report comes out. Those 2 reports. Look, here's my list, guys. At the very top, I got NASDAQ and Dow. Okay. I've got NASDAQ and Dow. They're the 2 strongest signals I'm getting. +9s. Remember, bullish is 5 to 8. Very bullish is 9 or higher. And the same is true in reverse for shorts. Okay. -5 or lower is bearish. Currently, nothing's changed. I can tell you right now, pound Aussie's looking a little ugly. We'll still take a look at it. But what I do have on the list that I didn't have yesterday is the pound US dollar and the Aussie yen. So we'll obviously look at the indices, gold and silver as well, since they're on the list. But let's lead off with these currency pairs first, okay? So let's go look at pound dollar and Aussie yen, because these are +5s. Pound dollar, Aussie yen. And I believe this was the example I shared with you yesterday, Connor. Okay. We were talking about demand zones. So what do we got on this pound dollar? Well, we got a bullish signal. So I start with my daily higher highs and higher lows, right? 4 hour, it's going to give me the same story. But before I go to my 4 hour, you guys see I got my red candle here with a big push up with a gap. So this is my foundation right here. Daily demand with a gap above it. Okay. Nice big gap. Go down to the 4 hour. What I got? Okay, I got a 4 hour zone here. Now it's kind of half in, half out of the daily, but it's close enough, and it's at the low end of the curve. So it's cheap. It's cheap. Okay. Cheap relative to where price is at. Because I'd be definitely, as far as a curve analysis goes, I mean, there's a couple different ways of doing it from here, but, you could go all the way, I guess, down to here to draw it up. Now it's just ahead if you put it there. It's kind of in that diddle in the middle zone, is it? Let's see. Is that the one we want to use? Yeah. I mean, yeah, by definition it is, but it's still way cheaper than up here. If we draw it here to this swing low, okay, then that puts us right on par. I think that's the one I would want to use because of how gigantic this green leg is anyway. Yeah, you could draw it down here, but we're just splitting hairs at this point, guys. Splitting hairs. And plus we're talking daily time frames. So we're talking, almost a month, a few weeks. So we're going to stick with this one here. And also that's where there was quite a bit of volume, okay, on the volume spread analysis. So when the foundation of a impulse move, when that happens with high volume, that's a good starting point I like to use as my swing lows and swing highs. So that's our curve analysis, guys. Remember, we want to buy in the bottom third. If we're short selling, we want to sell at the top third. We don't necessarily want to diddle in the middle, because this is where retail traders tend to get chopped up. Okay. So yeah, it's going to definitely have to make a nice pullback on the 4 hour. But if I drop to a 1 hour, okay, I got my gap here as well on this 1 hour demand. This is my leg out, and it just kept going. That's beautiful, guys. This trade is probably my favorite, like, by the books setup. By the books. To buy it because the recent reports have exceeded expectations more so, okay, for the pound. The dollar hasn't had the greatest last week or so. I think we went through it yesterday, right? We had all those bearish readings, 3 or 4 of them in the last 7 days. Right? So yeah, the pound dollar, it's a ways away, but that's my favorite long-term setup. When I say long-term, you guys, that obviously means higher time frame, 4 hour demand zone, and I'm buying into that trade, and I'm in it for at least 1 to 4 days. Preferably this hits early in the week so that it's given me Tuesday, Wednesday, Thursday, Friday for the price to do its thing. Now, as it stands right now, I mean, the reality is, guys, look how far away it is. So it may take a couple of days for it to roll over, if it does at all. Well, by then it's the end of the week. So my goal would be start seeing price roll over during the week, right? And then come Sunday, which is Sunday here in the US as far as the market open, but preferably Monday when the volume starts picking up, that's when I'd like to see it start entering my zone. Okay. And then just start getting your rollover, right? And just go buy it to the long side. I mean, this is beautiful. Preferably the price comes in and it hits where the daily zone starts as well. So it hits both the daily and pretty much the bottom of the 4 hour. That's a beautiful entry right there. And by the way, my 1 hour, I mean, that's a beautiful entry. But again, I have to be candid. It may take several days for this to set up, right? And it may not set up. It may just keep going. We don't know. Again, we don't chase price. We wait till price comes to us. Okay. Price has to come to us. Price has to meet our rules. And if it doesn't meet our rules, c'est la vie. We just let it go. We look for the next one. Chart is gone again. Guys, I don't know. I'm sorry. I don't know why that's going away. Let me share screen again. I wonder if I have too much stuff on my computer. I brought a brand new trading computer, but challenge is I don't have a webcam yet. As soon as I get a webcam, I'm actually going to utilize it because it's got like 59,000 benchmark points or something like that. I don't understand all the lingo behind these trading computers, but yeah, it's back. Good deal. Thanks a lot. But I'll probably eventually move my streams over to my new trading computer. This thing's a monster. It's a four monitor computer. It's got all the funky colors, clear, quiet as a mouse, and fast as hell, let me tell you. So I just need to buy a new, I just got to buy a new webcam for it. And as soon as I do that, I shouldn't have this happen to where the stream pops off. So apologize for that. That'll give me something to do for this week. Get online and buy me a webcam. So thanks a lot for that. Appreciate it. All right, guys. So that's pound dollar. Let's go look at Aussie yen because that's going to be the other bullish currency pair on the list. Let's take a look what we got over here. Okay. All right, good deal. Aussie yen, guys. And we got about 19 minutes before those dollar and Canada dollar reports come out. Aussie yen, okay, that's I mean, up, higher highs, higher lows, going upwards, so that's good. And I drew a bunch of colors over here. Price recently broke through this recent top over here, this former resistance, and closed. So I like this right off the bat. Why? Well, because if you trace down to the origin of the strong move up, that tells me there's some strength up in here. Okay. Now, I could trace that strength to the actual origin, which is here, but do I have any gaps? Let's turn my drawings off. Do I have any gaps down here, right? I had a gap. I had a gap for a while after this candle. What happened? Price rolled over and closed the gap and touched the zone and then went up. So that's a filled gap. It's a used demand zone, and I skip it and ignore it. That's an efficient price market, a price structure. It's an efficient market. So then I just keep going. Do I have any more gaps over here? Well, there was the tiniest of gaps, the absolute tiniest of gaps from the top of this candle to the bottom of this candle. Same thing though. Price rolled over and closed it, touched the candle, and went up. So with basically all these candles, I'm not even interested in. Not interested in any of these candles because the only thing I care about is where is the closest gap to the origin of the overall strong move up. And that's going to be right here. So let's turn my drawings back on. Okay. And there we are. Got that 4-hour zone there. There's my gap right there in the white box. Okay. So there's my strength. If I go down to a 1 hour, okay. Do I have a gap down here? Absolutely. That gap would be right here. Okay. It's a little higher up. It's not officially in the zone, but this gives me a nice little cushion. Okay. If I get into the price a little higher up off of the 1 hour demand, which is this candle here. Okay. Well, this is where I get some options. And we kind of went over this yesterday. Okay. The conservative thing would be to put the stop loss underneath the daily zone, but a little more aggressive. You could put under the 4 hour. I wouldn't even say that's aggressive because 4 hour itself, a lot of times I'll just use the 4 hour as the higher time frame because they're strong, guys. Again, 4 hour or higher. I prefer the daily and the 4 hour confluence, but I trade from just 4 hour zones all the time, right? Because in this case, 4 hours is my higher time frame, and then the 1 hour is kind of the entry. Okay. So yeah, there's our gap right there. Nice gaps. Okay. So I've got my alert set on Aussie yen. Set this up yesterday, and the only thing that's happened since yesterday was it kind of dropped, and then it's kind of went back sideways. So not really a whole lot to report. It did meet one of my rules though, guys. When I drew this up well, when I drew it up Sunday, my Sunday, okay, here in the States, I told myself it has to break that overhead resistance. And it did that. So it's already met one of my rules by just simply coming up here. Okay. Because that proves that this area is strong enough to bust through an overhead, again, overhead supply zone or an overhead resistance point. Because so at that point, you could look at resistance, support and resistance. Okay, I don't use support resistance to make my trade decisions off of, but I use support resistance to say, okay, the zone I'm interested in has got to either break through an opposing zone or break through a support or resistance line. Okay, whichever one, I'll take whichever. So yeah, there we go. Rule number one met. But again, I have to sit on my hands and wait. Okay, that's the joys of trading. We get a lot of sit on our hands and wait. Okay, so there we go. We'll let it do its thing. Not anything I could do right now. If I wanted to be really aggressive, I don't know. Small time frame. Let's see what we got down here. Yeah. Yeah. I don't know about that. Let's see here. 10-minute, 5-minute. Yeah, I don't think I like any of this. Yeah, I don't like any of these smaller time frame zones at all. Not really appealing to me. So there's nothing on Aussie in. Okay. I was going to see if I could find a 5-minute or a 10-minute or a 15-minute in here, but I just don't see anything. I don't have any expanded range candles flying upwards. About the closest you got would have been this one here. It's already been closed and bounced off of. So currently bouncing into some supply zones on 10 minutes, 5 minutes, 15 minutes. So yeah, this is just an overall pile of junk. If I try to get it on a smaller time frame, holler at me when it starts breaking this high up here, right? If it starts breaking that high up there, this swing high, okay, then we can talk. So basically, break through that swing and then come back and see if maybe this turns into a zone right here. Something like that. In fact, let's take a look at that on a 15-minute. There we go. Okay, look at here. So let's look at this candle. Okay. Why can't I trade this candle right here? Okay. It is a possibility, but I can already see a couple things I don't really like about it. Okay. Number one, there's a lot of candles to the left. Okay. A lot of candles to the left. You guys, I like to see 1 to 3 candles to the left, or the basing candles. So basically leg in and then up to 3 candles of basing action and then leg out. Now this one, you guys can clearly see there's just a whole bunch of them. So it really just kind of depends on how you squint your eyes and look at this thing. Do you look at that as a leg in candle? Well, I don't know. I just think that's a big congestion. It's also, but it is right at the former resistance point. So I do like that. Sometimes an extra odds enhancer can take the place of something that doesn't look as great. Something that would normally take me away from a trade. So in this case, just having that former resistance point going right above that zone, that's a little bit appealing. But again, for me to even begin to get interested in this zone, I need it to jump through a hoop for me. I need it to break some of these zones up here, especially. Because now we're looking at this thing on a 15-minute time frame. So by definition, I would want to see this 15-minute zone be strong enough to break through a 15-minute supply. Okay. I can't use this one because it's already been touched, right? Let's take a look at this. So that was a supply zone at one time on a 15-minute time frame. But it's already been mitigated. It's already been touched. So I can't use that as a zone for this zone to break through to prove its strength. I have to go up and to the left. Okay. Was this a zone here? It was, but it got touched. It got mitigated, right? Can't use it. Up and to the left, you guys can see that has clearly been touched. Up and to the left, what have we got over here? Take a look over here. Let's zoom into this area. Okay. So this was a zone, but It got touched. Okay. Gap was closed. Zone was touched. Zone mitigated. And it got touched again and bounced away. So basically, I show all that to say I don't like any of these areas for individual supply zones. Just break the whole damn area. That's what I really want to see. Okay. The green line. Break above. If it breaks above, then I might reasonably look at this as a potential demand zone. And mainly aided by the fact that it's just below that former resistance point. Okay. So I have to acknowledge that. If that resistance point weren't there, I probably wouldn't have a whole lot of interest in it. Say, all right, we still good on my charts, guys and gals over here? Yeah, there we go. Okay, good deal. So what else have I got? Guys, the indices are still up here. And again, if there's any other asset you guys want me to look at, let me know. Holy cow, it's foggy as hell outside. That fog or rain. I look like I'm in Seattle today. That's crazy. Let's see here, guys. Indices. And I just want to look real quick just to see if we have any news. Looking at my financial juice on the Forex side real quick. Yeah, Mexico. Yeah, nothing too crazy at the moment. Okay, so we'll ignore that for now. S&P. Oh, yeah, here we go. So let's go to my 4-hour chart on the indices real quick. Okay, so yesterday I said we had to break through this zone on the S&P in order for me to be interested in this demand zone. Well, we did that. Now we're breaking or busting into another zone. We're into another supply zone. Connor, yeah, pound yen. We can look at that here in just a second. Yeah, I'll look at that one right next. Yeah, I drew this up yesterday, guys. Okay. So it's met one of my rules. It's broken through this supply zone, right? So again, by breaking through this supply zone, I trace back to the demand zone. That means this demand zone should have some nice strength in it because it was strong enough to do that. Now, at this point, I'll be happy for it just to come back. But if it breaks through this other supply zone, just an extra bonus point. Now it's broken through a couple supply zones, right? But my main rule has already been met. So now just come down. Nothing's changed since yesterday except for the fact that it passed rule number 1. And then just come down. You guys see I got a white line in the center of that 4-hour zone. That's a 1-hour zone. Okay. So I've got gaps on all these. That's a good thing. So yeah, nothing's changed. I just need price to come back. And then that's a potential long right there. And I'll just breeze through the other indices real quick. And then I'll get to pound yen just because they're all pretty similar, guys. NASDAQ, almost a spitting image of S&P. So here's S&P again, broke through the supply zone. Here's the NASDAQ, but we have yet to break through that supply zone. So far, we have not had that rule met. Okay, this rule right here. Now, if it comes down to the zone without closing on the other side of this zone, I will still potentially trade it. I'm just going to knock off some risk, right? Not going to be putting on a full risk position. Just drop some risk. When it comes down, it's got to prove itself, whether that's a 15-minute bullish engulfing candle, okay, a candle with a wick underneath, some volume picking up, or just something like this, right? Break a structure, retrace to a new zone to the long side. Okay, break this structure here, right here, and then return down to a new, hopefully formed demand zone on this little impulse leg. Okay, my favorites. That's my favorite confirmation. I love it. I love it. What we got? 6 minutes until the dollar and Canada dollar reports come out. Okay. And then finally the Dow. The Dow. So there is one thing that has changed since yesterday on the Dow. Okay. So you guys remember yesterday I was talking about this 1-hour demand zone here. Down here at the origin, though, I've got a 4-hour zone. And I talked about this red box here, which is stop loss orders that are probably chilling there from these people here that bought here. Okay. Those buyers that they buy and they have to put their stop losses below, which are sell orders. Okay. By definition, stop loss from a buy order is a sell order. Remember, big banks and institutions need sell orders to fuel their buy orders. This is how accumulation works. Talking again about the Wyckoff method, okay? The master pattern indicator I was talking about. Okay. They have to accumulate their inventory. They have to get their inventory from somewhere. Okay. So there's stop losses there. Now, since I showed this example yesterday, we formed we formed a couple new demand zones. But the one that's closest to the price is this one up here. Yeah, I think it's raining its butt off out there. That's nice. I like rain, guys. It's nice and soothing, especially as a trader. You know how hectic trading gets, right? So anyway, 4-hour demand zone. It's not my favorite leg out volume. Okay, looking at this green candle down here, it could be a lot bigger. It's not. So confirmation entry. Okay, no limit orders here. This is just a confirmation entry. Let's see here. We've got a couple supply zones up top. Okay. We're not worried about them yet because they haven't hit. So yeah, if price returns right now, let's go down to a 1 hour. A 1 hour time frame. Let's see what we got. Okay. It looks a tiny bit better on a 1 hour because at least I've got a nice red candle here after no volume at all. Okay. And then our 1 hour demand is right here. Okay. That white line. Again, it's not the greatest gap going from the top of this to the bottom of that. Okay. Get our white box. That's our gap. But it's still a gap nevertheless. Okay. I would like it to be stronger, especially I didn't like the fact that it had a big ugly wick on top and closed down under the 50% of that range. Okay. That's a bearish signal, but price turned around and kept going. So I still want to keep an eye on here. As well as having that red candle. So I still want to potentially buy this market, but it's going to have to prove itself. Bullish engulfing candle, break a structure. Okay, the whole 9 yards. Again, break this structure here. New demand zone forms potentially somewhere in this area. And then we buy right here. This is our trigger. This is our trigger to buy this market right here. Okay. Only if it jumps through my hoops. Okay. Again, price has to do what I want it to do for me to get into this. If it doesn't do what I want it to do, I can't trust it. I can potentially trust it, though, if it breaks a structure like this. Because here's the thing, guys. Here's the cool thing about this. Even if it just goes up a little ways and retraces, okay, by then I will have already moved my stop loss to break even. So if this is my stop loss, and we got 1 minute, so I'm going to do this quick before the news comes out. Okay, if this is my stop loss right here, I want to measure from where I entered the market to the stop loss, and in this case, that's 76 pips. I want to go 76 pips on the other side of it. Okay, once price gets there, well, then I can move my stop loss to break even. Now at that point, I have a free trade, and I really don't care what it does. A lot of times these will turn around and take you out for profit. A lot of times they'll come down and tap you out for no gain or no loss, right? So that's the beauty about getting one-to-one profits and then moving your stop loss to break even. Is you want to talk about sleeping easy at night? Okay. That's a good way to sleep easy at night, is when you know you've taken your risk off after it just simply doing a one-to-one move. Okay. That's a powerful thing. Now, sometimes price will come against me and stop me out, come a little deeper into the demand zone, and then go and for a profit. That's fine. C'est la vie. It just depends on how you want to sleep at night. Okay. Especially if you're a swing trader. All right. Let's go look at the calendar that's coming out. We're going to flip to a dollar Canada chart. We're going to see what happens when these releases come out here in just a moment. I'm going to turn my drawings off. I'm going to turn my sessions bar off. And then over here on my other chart, or my other computer, I'm just going to pull up my calendar. Okay, we got 15 seconds before this comes out. Again, this is Canada's GDP report, where they're projected a pretty shitty number, to be quite honest with you and frank. And then the US dollar, which is projected to be not as good as well. So both of these potentially are coming out bearish for both currencies, guys. If that's the case, it may just do a whole lot of sideways, nothing. But we'll still get some volume nevertheless, because Everybody's watching it because there's almost nothing happening this week. And there you go. There is the release. Come and live in the UK, Mr. Peeps. You would lose your love of the rain. Yeah. Yeah. No, I hear you. I was watching a show on East India last night where it's the rainiest country or rainiest part of the world, I guess. And listening to the locals talk about it. And a lot of them have grown to love it. But, you know, you get used to it, you can get used to about anything, right? But yeah, no, I agree. I like rain, but I don't like it all the time. So yeah, you're probably right. I'd probably get tired of it. Okay, guys, the reports have come out. Canada nailed their forecast right at minus 0.3. Now, that is exactly what they forecasted. Their previous number was a plus 0.2%. So think about it. That's a 5% decline on their gross domestic product. That's not a good look. That is not a good look at all for Canada. Now, it met expectations. So the economists got that number correct. Okay. US dollar side, okay, that was where the preliminary quarter over quarter number came out for the GDP. Listen to this. This is good news. So the previous number was a 3.8%. They forecasted it to drop by 0.5%. But in fact, we gained 4.3%. So that is a full percent higher than the forecast. That is an excellent number for the US dollar. And that exactly is, well, that's why you got us so far just this tiny pop to the upside. Okay. That's dollar appreciation over the Canada dollar. Let's see here. Man, that is a good number. I'm just going to look and see what the graph looks like on that number. Yeah, I'll come back to this in just a second, guys. Let's go over here and show this real quick. Okay, look at this. Okay, previous number 3.8, current number 4.3. So that is a 0.5% gain off of last report. That's great. But it's even better that it was a full 1% higher than the forecast. That's pretty good, guys. Let's take a quick look at the graph on that. Let's kind of zoom in here. And these are basically quarterly numbers, guys, right? So there we go. Okay. Forecasted was way down here. Actual number was way up there. They get this report fairly close, guys. Think of these economists that predict all these numbers as meteorologists, right? How often does a meteorologist get the forecast wrong? A lot. Do they still get their paychecks on Fridays? They do. Okay. Economists are the same. They can be wrong all the time and still get their paycheck come Friday. So a lot of these reports, they get the numbers off, but on this particular one, you guys see right there, okay? This is the forecast is the gold line, okay? And then obviously the top of the bar is the actual number. Over time, they're pretty accurate with this particular report. Okay, they're pretty accurate. A little less accurate over on the November 23 number. Okay, August as well. But look how wrong they were on this number. That's big. That's a good number for the dollar. Okay. Now it is the preliminary number. Okay. Basically means it's early. It's not the official hasn't come out yet. But that's still good. That's an early sign. That's an early indicator that we've got some good news in the US dollar. Now it's just one item by itself isn't necessarily a buy or sell decision. Okay. But you start stacking a lot of good things together, and that's where a currency starts looking valuable, or you want to buy it relative to another currency. So anyway, good stuff. Good stuff on that. Yeah. And as I said, guys, you know, actually, it's really not even moved a ton, to be quite honest with you. It's literally has a range of like 5 pips. So that's actually not bad. Yeah, guys, think about it. All of your hedge funds, okay, all the big wigs, all the traders on Wall Street, they're probably waking up from their hangovers right about now, okay, from all their company parties, right? Hopefully they've all woken up, right? That would be a bad thing, but yeah, they're off dicking off, okay? They're off. Most of them are off. Most of the big whale traders, right? They're in Phuket, sipping on their margaritas or Mexico or whatever. Okay, so this is a lot of retail traders right here. So yeah, it's really not moved a whole lot, and that's why I say this is going to be a slow week. We'll probably get the same thing tomorrow when it comes to tomorrow's red folder events. Again, tomorrow we get the unemployment claims. I thought we had another one. Let's see here, guys. 23rd. Oh, well, we get, yeah, Governor Ueda speaks as well tomorrow. Did they change that from a red folder event to an orange folder event? It looks like they did. Wow. Huh. Wonder why they did that. Okay, so we've got our unemployment claims report tomorrow, guys. Same time, by the way. Same exact time that this report just come out. So, yeah, guys, this is pretty uneventful, okay? Kind of uneventful. So, yeah, as far as trading this thing, I mean, this dollar CAD is neutral anyway. But I think this is good for the dollar. So, for me, if I were to try to get into this trade, I'd definitely be wanting to buy it. But it's in an ugly downtrend. Okay, the trend is your friend until the bend at the end. Well, so far there's no bend at the end if you're, if you're a downtrender. I'd be wanting to buy it, but I don't. Again, the dollar as a whole just doesn't have a ton of great news lately. Let's go to the economic calendar, Roy. Let's go look over here. Let's go heat maps. Here we go, guys. Okay, here's our U.S. dollar. We looked at this yesterday, right? Looked at this yesterday. A lot of ugly red, right? A lot of ugly red. Now, the report that just came out is not on this list, right? This because we just got the preliminary GDP report. Preliminary. Well, the previous GDP report for the regular number that we had was September 25th. Okay, this is before the shutdown, the government shutdown. So we've yet to get that new updated number. In fact, that's the only one. Everything else has been pretty much updated except for the GDP number. So this is a good number that we had. That is a sign that when we get the regular, it should be good. But it's not like it's really going to strengthen the dollar because the previous time this report was released, it was already a bullish impact. Okay, we had went from 3.3 to 3.8%. So we already had a 0.5% increase. So if something's bullish and then the next report's bullish, well, it's not going to change my percentage down here. It's still going to remain 45%. Okay. Now, if that were a bearish report, the previous one, then that would change things. But because the previous report was bullish as well, that's just basically maintaining the status quo. But overall, the U.S. dollar, just one or two more bearish reports than the bulls, or than the one or two more missed expectations versus the ones that made expectations. So it's just not a great reason to buy or sell the U.S. dollar. It's just really not. Now the stock markets are looking good over here, but we're talking about the individual currency itself, and it's just not given the greatest picture. This is what a good picture looks like if we pass on over here to the Aussie dollar. 71%. Okay. It's had 5 bullish reports and only 2 bearish. Okay, that's a +3 net, right? So that's a sign of a fairly strong currency. What's a weak currency look like? Let's go over here to let's see here. Let's see where. Yeah, right here, the euro. Look at this. This is what you call a weak currency. When all the reports are red almost, okay? They had a horrible set of PMI data come out last week and their inflation report. Their inflation report came out good for their pocketbooks, okay, because it did drop by 0.1%, but not good for the individual currency. Okay? So the euro is my number one sell, and Aussie is my number one buy. Okay. So let's get back on over to the charts, guys. We'll take a look here. Let's see here. Do you guys have any other items you'd like me to look at, by the way? We still have 20 minutes. Let me know if there's any other currencies you'd like to look at. Oh, pound yen. Did we get to that? I don't think we did. Connor, we'll get your pound yen now. Okay, so pound yen is going to look kind of similar, I think, to the pound dollar. So just refreshing on the pound dollar, we have this newly formed demand zone. Well, we got a similar picture on the pound yen. We got the same 1 hour demand. Okay. And again, this is from the British pound that dropped their rates last week, but instead the value or the pound actually jumped, right? So it actually did the opposite of what a lot of people thought was going to happen. A lot of people thought that was just going to tank it. Normally, when you drop rates, right, the currency tends to follow. When you increase rates, when you jack rates up, that's when the currency, the underlying currency, tends to increase in value. But the opposite happened, right? Which is kind of strange. But hey, who cares what the logic is? All we care about is price action. So keep that in mind. So I got a daily zone right here. Right here. But when I turned my drawings on, what did it just show me? Okay, there's my daily. So I'm going to draw my daily up. Well, what happened up here? Why? What the hell is this, Tiger? I don't know. Let's take a look. That's going to be. I pull these up here from time to time. I forgot I had that one up here. Yeah. All right. I went to a weekly chart. And I am bouncing into a weekly supply right here. Weekly supply zone. Now, this is a daily supply zone up top. I don't know how the candle moved, but if I drop down to a daily, guys, there's going to be a daily supply at the top. So I have to be aware that if I'm trying to buy this market, it's bouncing into a weekly. Now, I don't personally fret as much about it hitting a weekly zone as I do when it starts running into the daily zone. Okay. My screen is off again. Gosh dang it. Yeah. 1 second. Let me just get this back. Dang it. I don't know why it keeps doing that. Yeah, it started effing up on me the last couple weeks of the other sessions I was doing. Is that better, guys? Let me know if that's better. Yeah, it looks good on my end, I think. Yeah, sorry, guys. There it is. Okay. All right, Connor. Thanks a lot. So yeah, guys, just to recap. Okay, price has bounced into this weekly supply zone. So I just have to be aware of it. I'm not necessarily going to not try to buy a trade or buy into a position here, but I have to be aware that I am in a weekly supply zone. Now above it is a daily supply zone. So my weekly supply zones, I typically color orange, and then I color my dailies yellow. That's just the way I do it. You can color coordinate your zones however you like. And then I color coordinate my 4 hour and lower time frame demand zones green. And then I color my 4 hour and below supply zones red. Anytime I write up a zone and there's something fishy about it and I don't feel like I like about it, I'll actually put a light red or a light green or a light yellow. Okay. That, especially if it's been mitigated, but just barely wicked into. If a zone has just barely been wicked into, but not completely went through the whole thing, I'll still keep an eye on it. I just want to know about it. So I want to caution myself with a lighter color for whatever that color scheme is. Okay. It's just saying proceed with caution. Potentially you could use it as an entry, but just be aware, and you may want to drop your risk just a little bit, right? So good deal. But yeah, strong uptrend nevertheless, guys. Let's go down to a daily. Okay, we got our daily demand here. Let's go down to a 4 hour. Okay, we got a 4 hour here, guys. This is gonna look very similar to the pound dollar we just went over. Pretty similar price action. Okay, there's my 4 hour demand. Got a gap there. I like that. Go down to a 1 hour. Guys, this process after a while gets simple as far as just simply mapping these zones out. It really does. So, I mean, it's easy for me to say. I've been doing it for 12 years, but, if you really want to learn supply and demand, the process actually gets fairly quick. And then boom, we're done. Okay, there's a trade plan right there from a technical perspective. Now, did we look at the fundamentals? Fundamentally, I'm just looking off screen. Yeah, fundamentally, pound yen is a +2. Okay, so it's neutral. Again, +4 to -4. That 8-point range is neutral. It's not giving me a strong bullish or bearish bias. So I just have to be aware of that. But if you're just looking at this from a technical level, yeah, it looks exactly like the pound dollar. So here's what I would tell you. If you have the choice between, buying the pound yen or buying the pound dollar, you might look the pound dollar's way because it's actually getting some bullish fundamentals. Okay, again, I harp back on the fact that just going over here to my top setups. Remember, pound dollar. Let's think about this for a second. So, what is the reason? Why is the pound stronger than the dollar? Well, the trend, the seasonality. Okay, this tends to be the month of December tends to be a good month for the pound dollar. If we're looking at a 10-year average, 10-year average, this thing is typically bullish. Bullish reasons are also the crowd sentiment is bearish. Okay, this is the retail sentiment. Retail sentiment says, maybe we'll spot them so easily. Thanks to, oh yeah, Mr. Peeps, good stuff, man. Happy to hear that. Yeah, supply and demand zones. When you really get good at them, it makes this process so much less stressful and so much simpler. Now, I did not say easy. I said simpler. There's a huge difference between simple and easy. Right? Finding a zone is simple after you practice and you've put in the time. You've put in the 10,000 hour requirement, right? I'm probably sitting about 25 or 30,000 hours at this point, but yeah, you put in about 10,000 hours and you'll be able to start spotting this stuff with one eye closed and the other eye, fixated on your TV or something. So couldn't think of a good pun there, but yeah. But back to the pound dollar, guys. Okay, retail crowd. The retail crowd is net short this asset, pound dollar. Okay, again, we look at that as a contrarian signal to buy. Observe the masses and do the opposite. 90% of traders lose 90% of their portfolio within 90 days, typically. Okay, so real stats. They're sad stats. They're pretty shitty stats, to be honest. But we have to know those stats. That's why they print out all these technical analysis books. They're teaching people to do the same thing. If everybody's doing the same thing and the liquidity is going the same direction, what do the banks need to fuel their orders the opposite way? They need their stop losses. This is logic, right? So another reason to buy. What else? Well, we got the manufacturing PMI is a bullish as favoring the pound over the dollar. Okay. We got the PPI, we got the PCE, we got the unemployment rate, we got the ADP. Okay, that's another jobs number. All these are reasons to buy the pound dollar. Now, you do have 4 reports against it. And then you have 1, 2, 3, 5 neutrals. So the neutrals, anytime you see a 0, just kind of cancel that out. Just pretend it doesn't exist. Because we're really weighing how many bullish reports versus how many bearish reports. So, and then there's a point structure because sometimes you'll see 2 points, sometimes you'll see 1 point, right? There's kind of a formula behind this, but yeah, the bottom line is you just add all the points together. 2 + 1 + 1 -2 + 2 + 1 + 1 -1. Okay, and then you finally get your score at the end. Now, this is not the end all be all. Remember, this is just fundamentally and sentimentally which currency is more valuable than the other in the interim, in the time period we're in, right? These numbers are very dynamic. They'll change. These numbers will change probably in 5 minutes. Okay, maybe an hour, maybe 6 hours, right? Sometimes these things will change a lot throughout the day. What's a +9 for NASDAQ right now? It could drop all the way to a +4, right? Back to neutral, depending on how many red folder events we have coming out. Now, there are a couple orange folder events, just so you guys know that this thing tracks, but it's mainly the red folder events. So it's a very dynamic scoring system. So yeah, I say all that to say, if pound dollar is giving me a +5 and pound yen is only giving me a +2, I'm going to take the pound dollar all day. And especially the fact that they both look good technically. but you're just getting a few extra reasons why to buy the pound dollar instead over the pound yen. But yeah, you probably can't go wrong either way because sometimes if it's slim pickings like it is this week, sometimes I may buy this anyway, even if it is giving me a neutral rating. Just because, guys, that's how strong and potent, in my opinion, the daily and 4-hour demand and supply zone confluence is. So yeah, I definitely wouldn't be upset if you bought that. I'm not going to lie, but that would definitely be where I'd want to be buying, if I were wanting to buy. So we got 10 minutes. Trading them as roller coaster, Mr. Peeps. Yeah, elaborate on that, Mr. Peeps. So obviously it sounds like you're newer to the zones. So there's probably still a lot of nuances that you'll want to learn, right? What is it do you find difficulty picking the correct zone? Because there are a lot of supply and demand zones on any time frame on any chart. So obviously the question we ask is, well, how the hell do we know which one to buy? Is that fair to say? Is it something along those lines there? And to that, I would say kind of the quick and easy answer is buy the one or sell the one that's as close to the origin of that overall strong move as possible. So if we take a look at the daily zone here, daily time frame, okay, where's the origin of the strong move up? Well, it's right here. Okay, all this nonsense here kind of resets itself because the origin for the move here would have been down here or down here, obviously. Okay, if we're looking at a weekly time frame, this is the origin. If we're dropping down to a daily time frame, I would say this is the origin of the strong move. So it really just kind of depends on your time frames. So if I'm looking at this and I'm trying to decide which zone, in fact, let's see here. I was just looking at one a little bit ago. That might be a really good example. And I know we got a few minutes left. So let's see. What was that? Aussie. Trying to decide which one that was. Gold? Was it gold or silver? No, I didn't want to use that example. Using them since watching you on Oil Prime. Okay, so probably 5-6 months. Used multiple time frames and ended up with loads of zones. Yeah, exactly. So it's easy to draw up a ton of zones, guys. Mr. Peeps, I would just say, yeah, now I just use a daily and a 4-hour chart. Okay, yeah. So you're using the same time frames. So the easiest way to look at that is look at where that overall impulse move is and just look at the, specifically seek out the zones that are the closest to the origin. So, I'm trying to find a better example for you here. And then also volume has a key role in it as well. Yeah, this was it over here. So let's go back in time on the Dow. And I got a few minutes left, so this will be a good thing to kind of end it on. So if we look at this price action back in time, well, the origin of this overall strong move is down here. Okay. Obviously, and this is an impulse move, and we know that because it was able to push through some tops. So whether it pushed through overhead supply zones or former resistance points, okay, this was an impulse leg. Now price came back, and then it turned into another impulse. We know that because it broke through these tops. So you can look at this as two individual legs, two individual impulse legs, or if you go a time frame or two out, this whole thing is an impulse leg, right? So the trick is, if you go to the very start of that impulse move up, the origin of the overall strong move, 4-hour time frame. Okay, now we're looking here. Okay, there's going to be your higher probability demand zone because it's the beginning of that overall move up. Now you have another one here. Okay, so this is another one you'd want to draw up because it is on a smaller time frame. It's a 1-hour time frame. Because now we go down to 1 hour, you got another one. So how the hell do we know which zone's going to work? God dang it! Is my shit not showing again? Let me go reshare real quick, guys. Sorry. That's going to be annoying if it keeps doing that. Figure it out. Okay, your screen is on your. Okay. Okay, we're good to go. Okay, so yeah, guys, look, how the hell do we know which zone is going to work? The answer is we don't. But what I would say is, you could very easily draw in a zone here. Okay, you could draw this as a zone at one point. You could draw this little spot here as a zone. I mean, you can really go overboard with zones, right? And I think you're experiencing that, right? So what I would say is the zones out here in the middle, that's diddling in the middle. Ignore those. Only go for the extremes. Okay, I pull out the example of the Hungarian flag from time to time, right? Hey, this is our curve analysis. Anything that's in red, ignore. Only unless you're shorting it. Anything in the white, like you see these zones I just drew up vaguely, okay, those are diddling in the middle. Those are in the middle. Okay, this is retail chop city. We only care about, we still have two zones, right? Well, here's what I would say. Banks like to go for extremes. They like to go towards inefficiencies in the market as far away as possible. So in this case, okay, they're more than likely going to want to go for this zone. But sometimes you'll catch a bid on this zone, and sometimes the volume has a say in it. So if there was zero volume down here, then I would not really care as much about it. If there's a shitload of volume down here, I care about it. Now, the whole reason I actually care about that 1 hour zone just above it is because if I go to a 1 hour, you guys can see there's a big red candle there, even on a 4 hour. There's a lot of volume right there. So that's the only reason, honestly, I drew up both of those zones is because of how much volume was created when I go to a 1 hour time frame. Let's just do that real quick. Hey, look at this 1 hour demand. Okay, look at the leg out. That's an awesome red candle. Okay. And it kind of whipped through that former resistance line. Okay. So I've got to pay attention to that. If there were no volume up here, I'd have zero interest in it. But you guys can clearly see that leg out volume was just as strong and sexy as can be, right? So we take a chance on this time frame as a confirmation entry, meaning price comes in, we break a structure. Think of it this way. Price comes in, okay, we look for a break of structure to buy. If price goes through it and we get a small loss, no big deal. Why? Because the better zone was down here all along where you could potentially put in a limit order. Okay, I would feel a little more comfortable putting a limit order down there because this zone at the bottom was the beginning of the overall strong move up. Guys, I don't know why that keeps doing this. I'm sorry. I'm gonna have to play around with my YouTube after the stream, figure this part out. Let's get this up real quick because I know we're about out of time, but I'll finish with this example. Yeah, I drew this up, guys. So yeah, just how do I know which zone's going to work? I don't, but I'm going to take a chance at this top zone because it has such strong volume over here, just like this, okay? Again, only because it's got strong volume. If there was no volume on this out move, I'd probably have zero interest in it. So look at a combination of the momentum of the leg out candles, the volume, or in this case, volume spread analysis, because currencies, well, it's a little different on the US 30, but currency pairs do not have centralized volume. So that's why I use the volume spread analysis to kind of track trading activity. It's not volume per se, it's trading activity, or tick volume, as they call it, right? So only worry about the extreme zones. Don't worry about these zones in the middle, okay? Because you can really just draw just an absolute shit ton of zones, if you just look hard enough. But we don't care about these zones out here in the middle. This is where people are getting chopped up. Okay, this is where people are buying in the middle. Okay? We don't want to buy in the middle. We don't like that. We only want to buy the good ones. Okay, so hopefully that helps. But yeah, again, it might just be another day of hand sitting because that dollar CAD barely moved anything. I mean, the Dixie itself, let's go take a look at it. And then we'll get up out of here in just a second, guys. I mean, yeah, the Dixie has gained a little value. I would expect that because, again, even though that was a preliminary number, that was a very strong reading for the preliminary GDP number. Okay. Dollar, just to kind of finish up, it has also bounced into a daily demand, right? This thing's looking pretty good. Looking pretty good. We had a bounce with a strong close up, and now we've come back. Are we forming a double bottom? With today's preliminary GDP number being that good, wouldn't surprise me at all if we run to the next zone, which would be up here, the 99 level. Okay. So we'll see how that goes. Yeah. It's all about being selective, Mr. Peeps. And it won't happen overnight. I mean, just learn, just 1% better is all we have to do each day. Okay. Don't worry. Don't ever push yourself to think you got to know everything yesterday, right? The reality is with with charting and looking at whatever it is you like to trade, doesn't matter what your trading style is, but especially supply and demand zone. The more screen time you get, the better. Just start playing around with it. And again, I would encourage you, just in closing, I would just encourage you to turn on that order block tool if you ever need to. Okay, this will help you spot them at a glance. And then again, you can set it up to where it shows you. Oh, and the trick to this, you'll see where it's showing candles that are funky. That's because those are zones. Those were zones, but got hit. So just as importantly as finding potential reversal spots, it'll also show you zones that did not work out, right? Here's a good example right here, right? Here's a demand zone that did not work out. Why? Probably because it's in the middle of this chop action. So again, we only care about the extremes. Okay, there you go. Extreme supply zone. What happened? Got hit. Dropped. Okay, dropped immediately. So just try that out. Yeah, if you have any other supply and demand related questions, feel free to let me know. I'll be here every day, guys, 6:30 to 8 o'clock. I think that's about it. Check out Coach Sam. Let me end with that. I'll just show you guys briefly, and just in case you weren't here yesterday. Let's see here, Sam, this, and then we'll get out of here. So if you guys if you want to look at futures, if you want to watch Coach Sam, okay, at Sammy Saleh Futures. Okay, he'll be popping up here shortly. So keep an eye on his live tab right here whenever that pops up. Also, Coach Adelina, she'll be popping up around. I think she said she was going to pop in at, I think, 11 Eastern time today, 11 a.m. Eastern Standard Time. So keep an eye at hers at She Trades Fire. Okay. So with that, ladies and gents, I'm going to get up out of here. I got work to do, and I got my hands to sit on. See if anything pops up. So toodaloo. I'll see you guys tomorrow again at 6:30 a.m. Central Standard Time. Peace out.